I'd like to thank Charlie Cho one more time for the previous interview. Charlie Cho, the franchisee at Supercuts. Thank you again, Charlie, for coming on, and I'll take your advice. And I won't try to cut my own hair. I'll wait until Supercuts opens, and hopefully that'll be soon. The next interview, I got a real treat for you. Now that many small business owners have received or going to receive their PPP money, their payroll protection program money, now we need to make sure that we're tracking it properly so that we have proof that we're doing it right. Because you know that the government eventually is going to want to see that. So next I have Jeff Kruszka, CPA. He's the principal at BS&P CPAs, and you're going to like this one a lot. And if you're listening to this, you're probably going to watch it because he's going to walk us through parts of a spreadsheet that he put together to make it really easy to track the PPP. And he's been gracious enough to share it with me. So I'm going to have that in the show notes so that everybody who has PPP is going to have a very easy way to track it. Next up, Jeff Kruszka, principal, BS&P CPAs. Okay, I'm here with Jeffrey Kruszka. He is the principal at BS&P CPAs. Jeff, if you could please just tell us a little bit more about yourself and tell us a little bit more about BS&P.
Sure, Tony. So I guess, like you said, I'm a principal at Kruszka and Polikoff. Started there at the beginning of this year, although that's a result of a merger of firms. My previous firm, Shunk Wilson and Company, I'd been there for about 12 years, and we merged with Kruszka and Polikoff on December 31st, 2019. Very similar types of firms. Now we have about 70 professionals. That includes our admin staff and our bookkeepers. We serve, mostly closely held businesses and individuals in, not just Western New York and some other areas as well. We provide audit and insurance services, heavy focus on tax and cross-border tax. We have some outsourced human resources functions as well as outsourced accounting services as well. So pretty well, well-rounded firm. My background, I've worked, as a generalist in a lot of senses, just because of the types of clients we serve at Shunk Wilson. So I have a good background in audit and tax, nothing terribly specialized, but stuff that's applicable to closely held companies and small employers in this area.
Excellent. Thank you. As a quick aside regarding the CPA firms right now, I know that this Corona crisis happened right near the tail end of what is called busy season, which is, the tax season and the time where CPAs are working basically 24/7. How has that affected the business during the Corona crisis?
I mean, first of all, I should say that we are lucky in this line of work that we can continue to work. I mean, we're considered essential, quote unquote, but really, like we have a brick and mortar place of business, but we don't have to be there to do this. We had prepared a bit for this, to have people work remotely. We started to phase it in, and then things changed rapidly. And around the third week of March, right after the March 15th deadline, we made the decisions to send some of our, a good chunk of our employees home and have them work in shifts. The biggest thing that's been a change for us is one, if you're working at home and you got your family there and you're balancing that life, obviously that's an adjustment. But two, communication is a big adjustment here for us too, because you have some employees working early, late. The same thing happens with your clients. Some of them, aren't able to contact you the way if they're used to calling, and they don't have your cell phone. You've got to get them up to speed on that. Some people don't communicate with email as well, and just getting those pieces back in place has been good. And also at the rate at which things have changed, we've been looking at guidance from the Treasury Department on when deadlines are going to be moved to. They would make an announcement, and then us in this profession would say, well, what about this filing, that filing, that filing, and then wait for answers on it. And so our busy season kind of evolved from the traditional one, then working at home. And then things really started to focus on these new pieces of legislation. As they moved the tax deadlines back, people were more concerned with how do I participate in these programs? Which one is the best for me in my business?
Excellent. The Payroll Protection Program. Now, for those who we'll get to the ones that didn't get it, but for those who did get it, it's let's just kind of summarize what can be covered through the Payroll Protection Program.
Sure. So the Payroll Protection Program, I think, is designed to offset the stress on unemployment systems in different states. So we want to be able to continue paying our employees and allow them to have money in their pockets as opposed to putting everybody, on layoffs or on furloughs. So what this program allows you to do is, if you're an eligible company, you've been able to get your application, and now the program is closed currently. It's possible it's going to be expanded. We can talk about that in a bit. But you can spend money on payroll costs, which really consists of compensation, wages, bonuses, salaries, healthcare benefits, retirement benefits. And in addition, the loan can be used for rent, utilities, and interest expense, interest on both mortgages, and now it appears to be on personal property. So equipment loans, for instance, would qualify as well. Any other business debts like lines of credit also appear to qualify. We're not 100% certain on that, but that is the implication. And go ahead.
So then, if used for those items, it's fully forgivable?
Yeah, so there's three ways in which the amount the forgiveness could be reduced. Okay, so if the loan is not used at least 75% of it on payroll costs, so wages, retirement benefits, healthcare benefits, then there will be a reduction. Okay, if you only use 70% of the money on those things and the other 30% on your rent and utilities, you're going to have a reduction to your forgiveness. If you cut your head count, your full-time employees, full-time equivalent count, there will be a reduction also. There are two ways that's calculated. That's kind of at whatever one comes out best for the borrower. And the third piece is, if you reduce anyone who makes under $100,000 a year, if you reduce their rate of pay by more than 25%, then there will also be a reduction to the amount forgiven. That also result in a reduction in the amount that you spent as well, because if you're cutting people's pay, it's hard to imagine you're going to be able to spend all the money you got under this program.
Okay. So then let's assume I filed and I had 10 full-time employees, and let's say that 3 quit during that time frame. If I hire 3 new people, will they be covered under the PPP?
Yeah, so if it's an immediate replacement, Tony, I don't think you're going to have any issue with a reduction based on the FTE calculation. Now, if it's let's say it's a voluntary separation by the employee, they don't feel comfortable coming into work, let's say, or if they just decide that they have to be to take care of somebody and they're not going to go on leave, if it's not concurrent, it's possible you'll result in a reduction in your FTEs for the calculation. The terms of separation, we're expecting some more guidance on that from the Treasury Department as far as what, if someone voluntarily terminates employment, you wouldn't think that the borrower would be penalized for that, but we're not sure how they're going to do that exactly. So basically, if you were to swap employees, swap positions, you should be fine. If you fill an existing position with an independent contractor, that will not take care of it. So if you were to say, I had an office employee leave and I'm going to use a temporary service now, that will count against you, for this calculation.
Right. And so you're saying that it's not clear yet if that would actually apply. Do you have any idea, or is it also not clear if, let's say, 3 people left, they were different positions, you hired 3 new people under different titles?
I don't think that the role, from what I can tell thus far, and again, all this, my views on this, I can't tell for certain, but I don't think that the role that the person plays with the company matters as much as it's the number of full-time equivalents. Anybody who works more than 30 hours a week under the SBA guidelines, and I'll send you the link to the FTE calculator or their definitions. anybody who works more than 30 hours a week is considered full-time. For part-time employees, you add them up and you divide their total hours worked by 30 for the part-time, and that's how many FTEs you get. So if you had 2 part-time people who work 50 hours, you're going to divide, they're going to count as 1, because I think you round down to the nearest 1. Where if you had, 3 part-times who each work 60 hours in total, that would count as 2. That's kind of how the calculation goes. And it's going to be done, it's mentioned monthly, but I believe that for borrowers who are participating in this program, they should be calculating it for every pay period. They should be accumulating that data.
Got it. Now, we were told that the calculation was 2.5 times your monthly salary. However, this is an 8-week program. So doesn't that mean there's going to be extra money?
Yeah. So, I mean, if you take like ballpark it, in the interim final rule, they actually like list the days in there, and they say, 2.5 months is roughly 75 days. And they're going to talk about something with like 56 days here, but really 8 weeks is going to be about 80% of that 2.5 times your average previous year payroll. So, but your loan amount's based just on payroll costs. Whereas the forgiveness, you have the ability to use payroll costs up to 75% of it, plus these other allowable costs of rent, interest, and utilities. So I think that's where they've given the ability for borrowers to expend all the money and have it all possibly forgiven, because they've included these other categories that are allowable expenditures.
Got it. Very good. There seems to be confusion on when you have to actually start using the money once you receive it. Do you have to start using it on day one?
So the program is it's an 8-week program for forgiveness for how it's calculated, and the day one is when the lender disperses the money. So the day you get the money in your account and you have it available to spend, that starts the 8-week period. There is no deferral on that.
Okay. So then if I decide that I don't start using it for a week or 2 after, and then I play catch up, is that okay too, or no?
Well, yeah, I mean, so you can play catch up in a sense. Now, you have to look at your non-payroll, your payroll stuff. You're not really going to be able to fall behind on unless you're, an owner employee, right? And you can change your own rate of pay. For your other items such as utilities and health insurance and rent, besides health insurance, the other items, non-payroll costs, there has to be some agreement in place prior to February 15th. So if you have if you're behind on rents, well, it can't be like a new rent agreement. It has to be something that you entered into basically before this became kind of an emergency situation here, which they look at February 15th as kind of the cutoff for that in the United States. But that's where it would be. So if you were, but you could use the money on, let's say you're behind on rent, you didn't have enough money to pay last month, and now you're going to pay that one in the current month. Well, those are all allowable as far as we can tell. The guidance on cash versus accrual is going to come into play here also. We do not have the answers on that yet. But you can use the money on those amounts, and you're just going to have to do the calculation at the end to determine if you spent more than 25% of your money on these non-payroll items. So that's where it'll kind of get caught up.
Got it. Thank you. Now, this is a great opportunity for essential businesses because they still have some form of revenue flowing through. So it's almost literally like getting free labor during this 8-week period. What's the advice for the non-essential businesses, like say a restaurant that's totally shut down and has no business? I mean, would it even make sense to take advantage of the PPP?
If you're not going to continue payroll, if you can't continue payroll, then it doesn't really make sense. If you could ride the storm out here with this loan, then perhaps it does. There are other choices also. There are other options available. The PPP is probably the best one out there. There is the EIDL, EIDL loan, which was, economic injury disaster loan. That is not as straightforward to apply for as the PPP because you have to show a loss and, your calculating it, whereas the PPP was based on last year's payroll costs times, divided by 12 times 2.5. There is also, some new legislation that may be coming, which we'll talk about. And for anybody who has, existing loans, the business loans that they're worried about, could I default on these? At the beginning of this COVID legislation, I think we're on like the fourth one now. The Treasury has told banks that they're not going to penalize them for restructuring loans as a result of this crisis. So if you're having, my advice on that is talk to your bank. Everybody is, but talk to them and tell them what's going on, and they may be amenable to restructuring a loan, going to some kind of deferral period, perhaps. I don't know, I'm not a banker, but they're not going to be hurt from a regulatory standpoint for making a quote unquote bad loan because they've had to restructure these.
And there's, for non-essential businesses, there is no deferment. They can't wait till close to the end of June or anything like that, huh?
No, now it's, I'll say that there is, the Treasury Department wants more money for this program, for the PPP program. They've asked for, the first piece of it was $349 billion, and that's all you basically used up. The program's closed for applications. They've asked for another $250 billion. As of last week, I believe that is just kind of stalled in the, between the House and the Senate negotiations. There is no bill to be voted on. It's something to monitor this week, because again, if they expand it, if you haven't been able to get into the program initially, let's say you were a self-employed individual and maybe it didn't open up for you on April 3rd, it was on April 10th perhaps. Well, you should be ready to apply like from day one. The timeliness on this, there was a rush like we anticipated, and there were a lot of people who unfortunately got closed out of the program, even though it was very large, because of just the number of applications, and every bank was only given so much to give out in loans. So I would, be paying attention to the news on that, and I would say that there will almost certainly be another piece of legislation that comes out. When and who it benefits, I don't know, but again, it's like first come, first serve on these, so anybody who needs to participate should be prepared, get their, we already have now really good guidance on how to apply for a PPP loan. Either you can look at the SBA's website, the American Institute of Certified Public Accountants, the AICPA has a resource center on this also. So that's something on the loans. And then the other thing I'll touch on is which kind of got lost in this, is there are some credits for employers for giving like paid sick leave, paid family leave. There is a payroll tax deferral for employers. So you can, if I believe I understood this correctly, that you could take the employer portion of FICA and Medicare taxes that were due from February 15th to June 30th, and they could spread it out and pay it over a 2-year period, basically remit it over a 2-year period there. So that's a possibility also, for employers. If you use a payroll processor or a third-party company, they should have resources for you on what's available in that aspect. And then, on the other side, I know for my firm, we are conducting a webinar tomorrow, or we're sponsoring one with an attorney from Phillips Lytle, who's going to speak on some of these matters tomorrow. So if we can put a link out for that. That'll be tomorrow morning from 9 to 10:30.
So that's going to be on Tuesday, April 21st. This is Monday, April 20th, and this is going to go out on Wednesday, April 22nd. So are you going to be able to? Are you recording that webinar that I can send the link to? Anybody who wants to see it?
I will have to check on that for you. I believe it's going to be recorded. It's sponsored by our firm and Sheridan Benefits, so I'm not sure, but I'm assuming it's going to be recorded.
If it is, I'll throw that in the show notes as well. Now, for the companies that have received the PPP, now they need to track it. And I've heard of 3 options so far, and I just want to hear what you think about these options and what you think is the best thing, what you're telling your clients to do. The first option is to just open up a separate bank account and to have everything flow through that bank account so that you can track it a lot easier. The second is create your own a new chart of account line item so that it's just easier to track everything. Everything flows through there. And then the third is just to create a separate spreadsheet and track it on Excel or something like that. What do you suggest?
So of the three, and I know that there was the first choice you mentioned there about a separate bank account. I had heard about that. I think that that may have even been recommended by the Treasury. However, my personal preference would be to create a separate spreadsheet and Excel file to track things. I think it's going to be the easiest way for lenders to check your use of funds at the end, because the application process for PPP really wasn't a normal loan underwriting process, right? You accumulate information, you're requesting a loan amount, and there wasn't a lot of other work that was done on the lender side to determine if you qualified. Now, if you were a sole proprietor with 100,000 in gross receipts and you asked for $1 million loan, that probably wasn't going to go through. But if you were another business and you had your payroll tax filings and everything else, and you were asking for $500,000 and your payroll is $2 million a year, and then you have retirement benefits, it was probably fine to go through. So now on the back end, though, they're going to do more work on how you actually spent the money to determine the forgivable amount, because the SBA is going to come in the third quarter of this year, I believe, and buy these loans back from the banks. So the banks have a bit more responsibility on the forgiveness side. So for a spreadsheet, now the American Institute of Certified Public Accountants, I'm sure, will publish a spreadsheet for forgiveness. That'll go on their website. Anybody who searches for AICPA and then PPP will probably go right to their page on this. They don't have it out yet because of the fact that there are a few items that really there isn't guidance on yet. We talked about the voluntary versus involuntary separation, the cash versus accrual item. I have a client I've been speaking with about the fact that they have a profit sharing contribution for their retirement plan from the previous year that has to be remitted by September 15th of 2020. And it's like, the question has been, could they fund that during this 8-week window and have it count as a payroll cost? I mean, it's certainly an allowable use of the money from the sense that it's a payroll cost there, but I don't know if it has to be something that relates to that 8-week period or not. So there are questions like that we're still trying to sort out. A normal 401k match that goes in with every pay period, that's going to be fine. But something that pertained to a previous year, but maybe it wasn't part of the calculation of payroll costs and loan amount, that's a little bit grayer. So, with that though, we have kind of developed some spreadsheets here to kind of track this. And if you don't mind, I'd just like to show you a couple of them.
Yeah, sure.
And how this would work out.
That'd be
So
great.
I'm going to show you one. So this here is my the spreadsheet that I've been working on, and what we have are some different worksheets. And
Did you did you hit share
is it
screen?
shared? Oh, I'm sorry.
That's okay.
Let's see. I want to pick that and share. Sorry, I closed it without hitting share.
No
Can you
problem.
see it now?
There we
All right, I
go.
think
Okay.
okay, that's better. So let me get you back up here so I can actually see what. Oh, there we are. Okay. So what we have, this is a company that's, they have a weekly payroll and they got their money last week on April 16th. So the fields in yellow here would have to be filled out, the gross compensation. So this is everything, and I think it's important people understand this. It's before any employee deductions for taxes, any employee deferrals for retirement, any employee contributions to health and welfare plans. It's everything that goes out in the form of compensation. It doesn't include reimbursements. So if you have a qualified type of a qualified plan where you have, they get so much for use of a car or personal use of their phone or something. If it's an accountable plan in that sense, and that's just a reimbursable expense, that's not included up here. But if you get an allowance of $300 a month for your car, that should be taxable compensation, and that should be included. Mm-hmm. So over this 8-week period here, I mean, obviously these numbers are projected. You'd fill in what the payroll would be. Okay, so there's a little bump that goes in the first payroll of every month with an auto allowance. Here, they back out any employees making more than $100,000 annualized. So down below here, what would need to be filled out is you'd have to list the employees who make more than, in this case, 1923 is would be the equivalent of $100,000 a year paid weekly. Mm-hmm. So anybody who makes more than that gross a week, only $1,923 are going to count. So we would back out the excess here of $353.84, across this for every pay period. Now, on this one, I would mention that we don't know if if you have somebody who's commissioned, let's say, they could have, and let's say that they make they get a commission payment with the first payroll of the month. Is that going to cause them to be way over in the first payroll? And then let's say they go back to their regular base pay, the next one, they're going to be way under the $100,000 equivalent. I'd err on the side of caution and assume that is the case. So if someone gets $5,000 one week and then $1,000 next week, I would say that whatever the cap is for the first week is what they'd be limited to, and they'd only count for $1,000 the next week. I don't think they'd be able to catch it up. But that we should hopefully get some more clear rules on here also this week. There's been a new interim final rule, but the Treasury has put out answers to frequently asked questions. They last updated them, I believe, on the 15th or 16th of April. So they continually add them and update them as they get them from, different sources. The AICPA is one of the main ones. But these are other payroll costs that I think are important that we'd accumulate. State unemployment insurance counts, so not FICA or Medicare, not those federal payroll taxes, just the state ones. Employee pre-tax health contributions should be accumulated also, because the health insurance premium payments are going to count, but if a portion of that is included in the employee's gross pay, then you need to make a reduction to show what the true employer expense is. And then in this case, they have a 401k match, and this is what the match would be roughly every week. Then we come up with, there's a full-time equivalent worksheet where this is going to be important to keep track of, and you've got to look at it for 3 different periods. Anybody who has one of these loans can start accumulating the prior year's data. So they're going to have to look at the period from February 15th of 2019 to June 30th of 2019, this should say, based on every pay period. So in this case, if they're weekly, that's a lot of pay periods. And then they also need to look at the time frame from January 1st to February 29th of 2020, because your FTE reduction is going to be based on whichever one of these is more beneficial to you. So if you had 30 full-time equivalents during your 8-week period, let's say, and then if we look at option 1 here, we look at the 2019 timeframe, maybe they had, 32 full-time equivalents. But if we look at the beginning of 2020 and they're at 30 full-time equivalents, then we're going to use the 2020 one is the denominator for our calculation, and you'll see that on the next, or you see it later on. And then here on the other tabs, I just, for people who are viewing this, they can see the different columns here. But, for borrowers, when they submit this to lenders, they want to, here we have like the date, the check number, if there was a check or an ACH payment, who they paid, the invoice number, the period it covered, the amount. The invoice that supports this also needs to be attached, but this is all just going to be very important, relevant data. It's going to make this a lot easier for banks, and to make it easier on borrowers too when they submit this. Retirement, if they fund it outside of payroll, if there's outside of that match. Rent, you also are going to want to include a copy of the rent agreement. For interest here, again, this will be not just mortgage interest. Now, mortgage principal doesn't count. So if it's for real property, it's just going to be the interest. And then, but if you have equipment loans, other things like that, for personal property, the indication is that those count also. So you could list those on here for just the interest. And then utilities, I'd expect clear definition on this, Tony, but right now it sounds like it may be more than just your gas, electric, water. It may include internet,
Mm.
telephone, and transportation costs. For sole proprietors or for self-employed individuals, it's pretty clear that that's the case, that your unreimbursed mileage would count, at the IRS rate. But for other companies, let's say you have like a fleet of trucks, well, if that, will that fuel cost count, or is that part of cost of sales? That's going to depend. We're not exactly sure on that. But I would say those are probably your 6 categories of utilities that people should keep in mind to track: gas,
Excellent.
electric, water, telephone, internet, and fuel. So then back here in this summary, we've basically pulled everything from those 8 weeks together. And then this worksheet isn't totally finished because we don't have the FTE reduction in there, but I'm going to show you what it'll look like. So that same stuff has been brought over here. So on a $400,000 loan, we come up with, how it was spent, payroll costs. We don't have any self-employed individuals here. This is for a corporation. So we don't have that item, that's 0. Then the rents, the utilities, the interest, the healthcare, and then any interest payments. And of the 400, they spent 362,000 during that time frame. Here's where they would calculate the reduction in the head count here. So you'll see that they had like a 2-person reduction, and that would result in like a $22,000 reduction to the forgiveness of the loan amount. This one here should be 30 actually, and it should go the other way, but that number was wrong. So you'll end up with effectively, we say here, you'd end up with, there was a bad formula there, but you'll end up with, of the 362,000 that they had spent, they would have 339,000 as the projected forgiveness, and the balance of $60,000 will become a loan, 1% interest, 6-month deferral on that, and it's a 2-year maximum maturity, no prepayment penalty on this. So
Wow.
even in this scenario where they end up with not the entire thing forgiven, they have, anytime they have excess working capital, they can pay that off, and there won't be any penalty for it. And the interest cost on it is going to be probably cheaper than any other debt, other than anything that was funded by an owner, personally.
Yeah, no doubt. Oh man, Jeff, I'm a big fan of spreadsheets, and this one is fantastic. So are you saying that I'll be able to share this with all the listeners?
Yes, we'll be
Oh,
sending
that's
this over
wonderful.
to you.
Thank
Yep.
you. Yeah, I'll put that in the show notes. If you want to share screen, if you want to unshare that. So
Sure. I believe that's
there
it.
we go.
Okay.
You got it. Yeah, that's a great spreadsheet. And you know what? You sold me on just working off of a spreadsheet, because that's a lot easier, especially if you have one that's really as slick as yours and very efficient, versus opening up another bank account and or adding a chart of accounts. That just adds work. You did make the comment, and I just want to reiterate that part of the reason for the whole idea with the spreadsheet is to also track your detail, have your detail ready, because eventually somebody's going to ask for that too.
Yes. So I think that's very important here. And, assuming this is going to be a one-time thing, and who knows if they ever offer a program like this. I've never seen anything like this
Me
in the
neither.
time that I've been working. My expectation, you don't want to be creating or modifying your chart of accounts so significantly for something that could just be a one-time item. And also, like, to put it all into one bank account and then start dispersing from there, you're talking about new checks, you're talking about changing accounts for payroll processing. It's going to be a bit tedious. You're guaranteed you're going to have some money that would have come out of your old operating account. Now, granted, are your funds quote unquote commingled? Yes. However, if you have another way to track them, it shouldn't be a problem. I mean, the receipt of the money should count as, should go as debt immediately when it's received. And I've had people ask me, how do I account for this as we go by over this 8 weeks? And I've told them, you don't do anything. You have a loan for 8 weeks. And at the end of that 8-week period, you're going to apply to the lender for forgiveness. And when they approve a forgiveness amount, that's when you're going to reduce your loan and have what's the best piece of this, which is tax exempt income. So that's the and even though there are, and thankfully there's people smarter than me that address all these topics, but one of the ones that was brought up was, are the expenses going to be tax deductible because if the loan's forgiven? Because I guess IRC section 265 usually says that, you can't have a deduction for something which you had that's related to tax exempt income. It doesn't. We'll see, but my feeling is that they're probably not going to do that. So you're probably just going to have an item that's going to be debt forgiveness that's not going to be includable in gross income for tax purposes, but that the expenses would still be deductible, I believe, is how they're leaning toward that.
Yeah, that's interesting. Excellent. Excellent. So a couple of other quick questions for you. We're all
Sure.
quarantined during the crisis here. And who are you quarantined with?
I'm here with my wife, who is also working, works for a bank in the area, credit card marketing. So she's got a lot doing there. That market changed a little bit. My two children, my son Liam, who is in kindergarten, so we've become kindergarten teachers. I mean, sort of. We still have help from his teacher, obviously. And my daughter Hannah, who's 2, who's a bit of a handful right now. It's not easy for everybody. And my father-in-law Mike lives with us also. So we've kind of a full house here. Every time someone asks me, hey, how's that going? I tell them, it's not as productive perhaps as a normal busy season or time in the office would be. On the other side, though, I never get to spend as much time with my family this time of year. I never. So it has been nice that we could, hey, when it's a lunch break, we get to go take a walk, or for, my son learned how to ride a bike during this time frame. I wouldn't have been able to teach him to do that probably during busy season. So those are kind of nice memories we're able to make here and try to make the best of this situation.
Yeah, for sure. And with your spare time, I mean, it sounds like you taught your son how to ride a bike. That's part of
Yeah.
it for sure. And what else are you doing with your spare time? What are you watching, if anything?
Well, we watched, we caught up on some of our binge watching. We caught up on Ozark. We watched, I was watching Westworld, but I gotta tell you, either I don't pay attention closely enough, or it's just beyond me, because I can't keep track of who's who anymore and some of these characters. So I kind of gave up on that one. But I've got some books here and stuff that we've been trying to catch up on. My goal for this year was to read a couple more books on management. I don't have an MBA, but managing people in this line of work is actually probably as important or more important than the work itself. The concept of leverage in this industry is very important. You couldn't do all the work yourself. You have to have good people that work for you and understand that, and you have to try to maximize their skills. So I have 2 books on that. One I'm just finishing up now. That's just a quick read. The other one, hopefully, I'll dive into, because it looks like I'll be home for a little while longer still.
Yeah, that's the truth, along with
Yeah.
everybody else. Well, Jeff Kruszka from BS&P CPAs, thanks again for joining me. I appreciate your time.
All right. Thank you very much, Tony. Appreciate you having me.
A lot of great information here, and we'll have links to BS&P, the spreadsheet, and gosh, I think there's another thing I'll have to look
Yeah,
back.
hopefully we'll get the webinar if that thing's
webinar.
reported tomorrow. Yeah, we'll try to get a link for that too.
Excellent, Jeff. Thank you very much.
All right.
Have
Thanks,
a great
Tony.
day. You
All
got
right,
it.
you too.